Hello, welcome to episode number 39 of Daily Market Mastery with me, Christian Rauchenwald, popular investor on eToro. As always, in Daily Market Mastery, we take a look into how and why I'm managing my portfolio, not why I'm managing my portfolio, but how I manage the portfolio, how I pick positions, how positions are going, and so on, using Elliott Wave Theory or the Elliott Wave Principle, the book that you can find by following the link in the description below to either get a physical copy or read it online for free. Now, where do we start? So, before we jump into it, so last week, obviously, our portfolio lost another 1% or so because we saw another rally in the SPX, NDX, and so on, and also in the DGI. Not sure about the Russell 2000. We'll have to check that. And obviously, that sucks because we're betting against the market. And while it paid off very, very big in 2022, in 2023, so far it almost wiped out 30% of the portfolio, and which is a pity. Yeah. Now, I can already, for those of you that don't want to stick around till the end of the stream, take away that my position hasn't changed. Markets are gonna go down. That's my opinion. Before I continue with the opinion, obviously, usual disclaimer: everything that I share in this live stream / video, depending if you watch it live right now or later as a recording, is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Yeah, so I'm just sharing with you why I'm doing what I'm doing with my portfolio. Doesn't mean that it's the right thing for you. Also doesn't mean that I'm always right. Yeah, nobody's always right. Anyway, so before we jump into it, I actually, had a thought just earlier today, and that was there are like different kinds of people, or not different kinds of people, but you'll meet people in your life that are like telling you certain things. I believe this is going to happen. So, like for example, if you think back like 2016 or so, if I'm not mistaken, presidential election when people were like, okay, Trump has no chance of winning, for example, because whatever, he's a moron and failed businessman that still somehow is a billionaire, but whatever. And so that's like the first, or yeah, not kind of people, but let's say, yeah, like let's call it kind of people, and hopefully you guys mean what I, or get what I mean actually by that. Yeah, so you have people that tell you what's going to happen, what's about to happen, and so on, that just talk about it. So they say, this is going to happen, yeah, and maybe they even tell you why it's going to happen, but they don't do anything. So if people were like, okay, Trump is going to win, yeah, like as an example back then, but then they don't, for example, place some bets, because back then you could also, I'm sure you can do it with every presidential election, but back then you could also place bets online to say, okay, if Trump wins, the odds were actually quite reasonably good. I don't recall them exactly, but still they were good. You could have put your money where your mouth is, and therefore make a profit if you're right. Yeah. So it's kind of so. Let's talk in levels. Level number one is like people that share their opinion with you. If you want them or not, doesn't matter, but that don't do anything with it. Yeah. So they share it, but not in a public setting, not something that's on permanent record, but just in a conversation with you. So they tell you, hey, I think Trump is going to win because of that. Yeah. Well, I think the SPX is going to go even higher and get a new all-time high, blah, blah, blah. But they don't invest in it. They don't, there's no record. So it's not that they're publicly stating it. Yeah. And then obviously you have the next stage, and that would be that you actually put your money where your mouth is. You might not tell it anyone, but you might place a bet on Trump will win the election, or so back then. Yeah, I'm not talking about the next one. Yeah, and maybe you even share, hey, I'm so sure that he will win. That's why I based $100 bet. Yeah. In fact, back then when the Trump was up for election for the first time, back then I lived with two of my close friends in a shared apartment, and they were both like, no, Americans are not stupid enough to vote for that guy. Yeah. And I actually made a small wager with them. So I told them, okay, he will win because people on average are stupid enough to believe it, and made a small €100 wager back then, and actually basically won that wager. Of course, we all know that he got elected as president. So that's the second level. So you share your opinion, but you also put your money where your mouth is. Yeah. So which basically doesn't mean that your opinion is more likely to be true. It just means that you're so convinced of your opinion, or you believe that much in your opinion, that you're willing to put your money on the line for it. Yeah. And with that, you also have a record, because you have a wager either with some betting service or with a friend of yours that disagrees with your opinion and is so convinced of his opinion that he takes that wager. Yeah. And that would be level 2. And then you have obviously level 3 is when you do things in a public fashion. So if we talk about stocks or so, if you are a public analyst, so you share your opinion and you share, okay, based on whatever the financial statements, based on this, based on that, you believe that that stock is overvalued and its true value would be at this price or at that price or whatever, and that's why you give a buy, sell, hold recommendation, whatever. Yeah, so that's level 3 because you publicly with your name next to it, and that's, I think, makes a crucial difference if you're attaching your name, because you only have one name and it's your credibility, your reputation that's on the line every time you make an assessment. So like, for example, since we started the Daily Market Mastery, we have been saying markets will go down. And since we started Daily Market Mastery this year, they've been just moving sideways and slightly upwards. Yeah, which means obviously so far I'm kind of like looking like a fool here on the stream, especially for people that don't use Elliott Wave Theory, or people that don't believe in Elliott Wave Theory, or people that just are bullish with the markets or so. But it makes a crucial difference if it's like, if I would be, I don't know, if this YouTube channel would be called whatever, like stock market tips, and I would just use some alias or pseudonym for those streams. It, in my opinion, makes a crucial difference compared to using my real name. And literally, my name, my reputation is on the line with every episode of Daily Market Mastery, because in every episode of the stream, I'm sharing my opinion, and not just that, but I'm also putting my money where my mouth is, because that's how the positions in our portfolio look like. I'm not having streams where I tell you, well, based on this and that, whatever, like that and that stock will go up, down, sideways, in circles, yeah. And then you go in and invest, and maybe I pitch you some affiliate links to make commissions. But I'm literally having episodes where I'm sharing how my portfolio is invested, which adjustments we make, why we make them, and I'm always putting my money on the line, and my reputation as well. Yeah, it reminds me a little bit of like The Big Short, where you see obviously how he bets against the housing market, yeah, and initially just incurs huge losses, and then just confidently, at least in the movie, says, yeah, like, I'm not wrong, I might be early, but I'm not wrong. Yeah, and I'm fairly confident that I'm in that same position right now, that I'm not wrong, markets will crash. Again, it's just my opinion. Yeah, if they don't crash and you invest or you bet your house and everything you own against the markets and you lose, don't blame it on me. Do your own research, and make your own decisions. But for me, not a lot changed. Now, obviously, we've had basically 5 months of losses, 1 month break even so far this year, and the 6 month we're at -2% so far, which is obviously a bummer. I actually thought that we already would go down so far this month. The month has not that many trading days left. We'll have to see how it ends. I'm still confident that by the end of the year, we'll be looking at a profit, which might sound like a ridiculous statement considering that we're at -29% so far year-to-date performance. Should still be, I'm not sure if we're still up in the 2-year performance, because obviously the January 2-year performance is still plus 40%, so still incredible returns even on 2 years, considering the incredible loss that we suffered so far this year. But yeah, so just wanted to share that. So yeah, like whenever you hear some opinion or so, consider if it's just somebody sharing the opinion with you. Do they also put their money where their mouth is, or are they also putting their reputation on the line by actually publicly stating, so in a public way on the record, like in this video stream that doesn't get deleted, or in posts that don't get removed, and is their real name attached to it? Now, that said, we're going to take a look at what happened and what I think will happen. And at one mistake that I actually made, dumb mistake, but we'll see. Yeah, like, I mean, I'm also human, I'm not perfect. And yeah, that said, if you're curious about my track record, you can obviously follow the link that you see on the screen right now, and or also pinned in the chat or in the video description down below to check out my portfolio on eToro. And if you want to copy that or copy somebody else's portfolio or whatever makes you happy. So anyway, we are going to jump right into it. I'm going to share my screen with you guys. And here we are. We're going to start where we have there we have our portfolio. And we can basically see, so we're obviously suffering huge losses right now in the SQQQ, SPXU, SRTY, GME, SDAO. Some of those losses are theoretical because in the SPXU, for example, in the SQQQ, we made huge profits last year, with ending the year with plus 45% or so, and basically sold or closed a couple of positions and reopened them. So that's not the actual number, how our investments in those two ETFs are going, but it's just how the latest or still open positions are going. Yeah, GameStop, same thing. We made incredible profits during the not squeeze in 2021. yeah, it was 2021, yeah. And had to then close the positions and reopen them, so that doesn't reflect how GameStop is really going. In the SRTY and SDAO, we actually have a loss right now, and we actually had in both small positions that got closed because I, again, human error, made the wrong stop loss on a level that I didn't want to. Yeah, other positions we're gonna look in the detail real quick in a second. Black Knight Inc. up, Domo up, Goldman Sachs up, Disney currently down. We'll have to take a look at that. And Icon Enterprises up. All of them, all those positions, all those market entries made using Elliott Wave Theory, and relatively not that long ago, like literally within the last couple of months. So those are not those 40%, for example. If we look in here, we can see that we hold that position for slightly more than a month and are actually up 42%. Yeah. And that's all. There is an episode about Icon Enterprises. You can check it if you take a look on the channel, and you'll see basically why we invested, when we invested. There are actually 2 episodes, because in the first one we had an error on the chart that led to a wrong analysis, and then in the second one we spotted that error and then entered the market actually almost perfectly a day late, but still. And yeah, anyway, looking at the history, you can also see that we just recently closed positions in NIO and Ford, also using Elliott Wave Theory. And you can see in this case, for example, we had the position open for less than 2 months, 25% return. And in this case, we had the position open for 5 months, 18% return, again, both using Elliott Wave Theory. That's our last 30 days. Now, if we look longer, we also had some losses. So if we look last month, so I said SDAO, SRTI, positions where we lost because, again, I set the stop loss at the point that I didn't want. But then again, Shopify investments, 2 positions, this one 2 months or less than 2 months, this one less than 3 months, or yeah, a little bit more, 5 days more than 3 months, both with 30% up using Elliott Wave Theory. Investments in Domo, this one actually 12 days, 15%, 12 days, 15%, yeah, also using Elliott Wave Theory. This one in Peloton, we got wrong, but you can see the trend. So since I started this series, and we also started to pick individual stocks and not just bet against the market, that with Elliott Wave Theory, we are also not always right. It's mostly then a mistake on my end by mislabeling the charts, or like just misinterpreting the chart and applying Elliott Wave Theory wrong. But overall, our winning trades are more than our losing trades, and our profits are quite substantial in terms of the percentage gains that we achieve. Now, we still have an investment in Domo, although we already took profits there, and that investment is also again up 10%. And yeah, we're gonna look at the rest real quick in a second. We're gonna start today with the DJI, the Dow Jones Industrial Averages in this case, and a mistake that I made. Now, for that, I'm gonna share. If you've watched a few of the previous episodes, you know that I'm also using the so-called Elliott Wave theories from elliottwave.com. Again, everything linked in the description down below for my analysis or to help, because they share their analysis and outlook for the bigger indices. So it's like a great help, because that's literally from the people that co-wrote or wrote the book about Elliott Wave Theory. So that company, the people and analysts there, not only are they full-time analysts and there's more than one person doing it, but they also have way more insight into Elliott Wave Theory and way more practice. So I trust their assessment with zero doubt. Now, about the mistake that I made, you can see that we labeled this here as a wave 1, wave 2, wave 3. If you don't know what that means, please check out the first episode of the Daily Market Mastery series, because there it's a little longer, it lasts an hour, but we cover the basics of Elliott Wave Theory, and then go use the link in the description and either read the book online for free. You don't have to read all the chapters, but at least the first chapter to understand the basics, and or get a physical copy. And now, so we labeled this as 1, 2, and this here as a flat correction where wave B makes a new low, yeah? And we did that because I made a very, very dumb mistake. If we switch to the desk cam, I cannot show you the details because obviously the Elliott Wave Theory is a paid subscription and I cannot show you all of it. But basically that's the Dow Jones labeled like this, with like wave 1, and then a new low here with the flat corrective pattern. So A, B, C, yeah? However, the mistake here that I made is that actually that's for December 2022, when in fact this is this year's chart. I don't know how it happened to me, yeah, and I even in my episodes pointed out I would not have noticed this, because I would have labeled this as wave 1 with a leading diagonal 1, 2, 3, 4, 5 here, and then as a result, this here would then be, I just have to remove that, so that's wave 1. We can actually delete that. And in this case, then wave 2 would not have been finished yet. Yeah, so wave 1 finishes here, and wave 2 hasn't finished yet. Yeah, so as I even pointed it out in my episodes that I would have not seen a flat corrective pattern here, but I trust Elliott Wave .com and the team there. And yeah, the mistake is not, sorry, should have shared the screen, but the mistake is not, switching back. So we had it labeled as like this with like A, B, C because I looked at the wrong graphic in the Elliott Wave Theory. Really, really stupid mistake. Sorry for that. I mean, it cost me money as well. So yeah. But yeah, even though in the episodes we made, I already pointed out that need a leading diagonal for that because it's not an impulse wave. So leading diagonal. So when I pointed out that I would have labeled this like this and that we're still then basically in wave 2. Yeah. So that's the bad part here. So basically, obviously makes a difference because if we think wave 2 is here, then we would assume that we're now already in the 1, 2, 3, 4, 5 downwards trend. If we assume wave 2 hasn't finished, then we're in a sideways movement with a little bit potential to go further up. Now, we have the new Elliott Wave Theories, and I'm going to share the desk cam real quick again. It just got released on the weekend, and there we can see the Dow, and I'm going to go a little bit closer on that one chart, and we can see that basically the assumption is that we have a combinative corrective pattern with wave A, B, and now wave C in progress, where that wave C in the end right now is playing out as a so-called contracting triangle. Yeah. Now, if we switch back to the chart and we get now switch back to the chart, yeah, there we are, and we get a Elliott wave triangle, then the triangle would basically start here, and that would be the triangle part, which means, oops, zoomed the wrong direction, sorry for that, which means we basically have a little bit room to go, or actually not that much room to go anymore, because very often, if we get a trend line here, very often in a triangle, B, C, the last wave will actually have a short breakout from that, and then we go down, yeah, which means that we actually are due here in the Dow Jones to actually start our downwards journey, yeah. Similar like how we made the profit in Ford, because I think it was Ford. In Ford, we actually spotted this contracting triangle here, and where those two lines would actually converge a little higher than point E, and the point E goes slightly below, and then we make our journey upwards. Yeah, so, and that's how we spotted. We had a bad entry. I entered too early despite labeling and recognizing it as a triangle. I did not set a pending order at a lower level, but I actually entered here. I honestly don't know why I did it, but we still made a profit there. So yeah, happens. Nobody's perfect. But yeah, so the similar situation is now here the case that we here, according to Elliott Wave theorists, looking at a triangle that then resolves like this. Yeah, so obviously question would be, what is this corrective pattern? What is that corrective pattern? But it doesn't really matter in the end. So how that subdivides, what matters is that we are at the end of this wave, and with the end of this wave, we should start then up our wave 2, then also ends here up, yeah. So we should then start our downward journey in the DGI. Yeah, we will see. Obviously, I thought we would already, because again, my mistake mislabeling this as wave 2, expecting that we already see the downwards trend for the first 2 weeks of July now. But yeah, we will see the next couple of weeks. We should see the downwards trend. However, there is still a little bit room for a little bit upwards movement to move that point E a little bit further. Yeah. And I'm just triple checking. 1, 2, 3, 4, 5. Yep. So there is still. Wait, triple checking. Sorry, mislabeled the triangle. Don't get me wrong. Yeah, so good that I'm triple checking. Elliott Wave triangle. So the Elliott Wave triangle actually, there is wave C. No, okay, I have to manually label it. The auto labeling doesn't get it right. Yeah, so tools, Elliott Wave triangle, because the triangle actually would be like this, and point 4 would be here. Which one is the lower part? 337167, 33705. With now our wave E. I'm just gonna put it some wave D. Sorry. Okay, quick 4 times check, yeah. So figure 9, yeah, that's always the. I just read, by the way, just so it's not that I had a lot of time to prepare for the stream. I literally just got the Elliott Wave theories before the stream. So where do we have that explanation for figure 9? Nobody knows that. There's so many pages. Figure 9 shows that even as those few leaders propelled certain indexes higher, the DJIA has been going nowhere but sideways, as shown on the chart, blah, blah, blah. As shown on a chart that Dow has a bit of open air just beneath the upper line that so far contained wave C. The Dow's action in recent week is consistent. Sorry, yeah, not with a triangle. Yeah, I should have read better, but with a diagonal, a wedge shape. So it's a now what was that then called? It's then an ending diagonal pattern. My mistake. Yeah, blah blah blah. Yeah, so that's why that doesn't check out. So that's then here actually a tool and an ending diagonal, which is part of another corrective pattern. So, and that's then, yeah, that also doesn't want the auto labeling. Yeah. Okay, then I'm just going to show you how it looks, because and then I will worry about it later to get it on the chart. So you can see here, does it get sharp? Sharp, please make it sharp. Hello. Yeah, that's as sharp as it gets. So you can see that diagonal / contracting pattern in the end, which would mean there is a little bit graph to the top, but after that, we also finished that pattern too and are on a downwards journey. Yeah, so sorry for the mistake with the triangle, for the confusion. Again, I'm also human. I also make mistakes. Nobody's perfect. Yeah, and yeah, so that about the Dow Jones. Now in the SQQQ, or let's start with the SPXU, so the counter trend investment, basically nothing changes. I thought we already finished our wave 2 here. It looks like it's still going a little bit further. Yeah, so the overall pattern, however, is still exactly the same, where we expect, okay, that's a combinative corrective pattern, and that combinative corrective pattern, in my opinion, already finished back there. Apparently didn't. That's why we had that blow off top. And what's very important here, we don't need that line anymore, but what's very important here is that, which is also part of the Elliott Wave Theory of the latest, just have to find the right page so I don't misquote anything, is that, where was it? There's actually a graphic about it or not, like, yeah. So that basically in the, okay, that's for the, is that for the SQQQ? Blah, blah, blah. Okay, for 45 intense minutes this morning's the blue chip indexes blew off, and all the while the broad market was tanking. The Nasdaq 100 climbed 140-80 points, the S&P tacked on 70 points, both indexes reaching a new rally high. The DJI climbed just shy of 200 points to eke out a new intraday high for the month, yet it did not manage to get above the high it made 7 months ago on December 13. On the moment the Nasdaq 100 reached its highest price, there were nearly 3 stocks down for every one up, and the Russell 2000 index was down 1%. Yeah. So money managers obviously spent the first hour of the day furiously trading their secondary stock for tech leaders, as they have been doing for most of 2023. In the end, both Nasdaq indexes closed lower on the day, and so did the Standard & Poor's 500. The Dow closed up, but the advance to disadvantage ratio stayed at 1-3. Figure 8 shows how skewed the leadership has been. Just 7 stocks account for nearly the entire gain of the Standard & Poor's composite index of 500 stocks for 2023. Never mind how much they dominated the Nasdaq indexes, yeah? Which means there is currently only 7 stocks or top 10 stocks in the indexes that are responsible for the entire journey that we've seen here, yeah, in the SPX and the NDX, while the rest of the stocks either is already losing value or breaking even, or like by far not performing as well. Yeah. And once that kind of like hype about AI and everything else that currently is driving the technology stock boom flattens out, people stop buying, people take profits, we actually see the decline down here. Same is going to be true in the NDX. Again, like our wave C just moves. I know it's frustrating because it means that we also incurred a loss on the way. What happened here? That one we don't need. Yeah. So we incurred a loss along the way, but pretty much it just means, okay, that channel here is then 1, 2. So that channel here goes like this. And yeah, that line we don't need anymore. And yeah, like it fits the description of like Elliott Wave Theory, although we retraced way further than we usually would in a wave 2. Again, not always, but usually we would turn around at wave 4 point, and obviously we went much further, and that's just like responsible for such big amount of the temporary pending losses that we have in the portfolio. Yeah, so Russell 2000, similar situation, or not similar situation. There we already finished wave 2, which means this here is another wave 1, 2. We retraced further than what we would think or expect, because we actually would have thought, okay, 61.8, that's the usual area of turnaround, anywhere between 38.2 and 61.8 Fibonacci retracement, but we obviously went further. Yeah, I don't see room up there anymore, to be honest, myself, so actually we should go down here. And then we have SPX, NDX, DJI. Did we have SPX? Yes, NDX, DJI, we already looked at in the beginning, and I admitted to mislabeling the chart, my mistake, sorry for that, and the Russell, yeah, so yeah, if you've been copying my portfolio so far, and even if you're currently looking at a temporary loss, yeah, like I encourage you, like, doesn't matter if you're down 5%, 15%, or like if you really had the worst possible timing starting at the beginning of the year to copy and you're down like 29%, well, give it another 2 weeks and you'll see how it turns out. So if we turn in the right direction, or if I'm proven completely wrong, yeah, I'm confident I will not change my positions, because again, I think we'll turn around now. I might actually even double down in my second portfolio on the investments, simply because I think from here on downwards we have the biggest profit potential. But yeah, I might be wrong. You never know. Nobody's always right. What matters is the end of the year performance, or actually the multi-year performance, and not the short-term performance. Now, moving on, as said, we wanted to look at Disney real quick, because there we have an 8.9% loss on our position. So yeah, how is it going here? Disney might turn out to be actually one thing where I got it wrong. We'll see, which would really be a pity, because when did we jump into Disney? So we had the 38.2 retracement here, which would be a nice area for turnaround. But we did not, and it aligns with point wave 4 of the previous impulse wave, so it would actually check out as a turnaround point. But looking at this, yeah, that might actually still check out. So that might be, from the looks of it, wave 1, and here wave 2, and then we have wave 3 in progress. So starting here, because that here looks nicely like an ABC corrective pattern. Yeah, I mean, not a super perfect one, but a nice enough one. And no, that needs to go on the left. The left one is lower, yeah. Let's just, that one is 87.11. Okay, maybe both are same. Yeah, so that's wave 2, where then theoretically on a smaller scale, that might be the next 1, 2 already in progress, where we might be in wave 3 now, and that wave 3 would eventually complete that wave 3, and so on. So we'll have to see. But this is one of the things where we are close to our stop loss at 84.07. And yeah, either we are right, which means we'll actually go up here and it will again be a huge profitable position, or we are wrong and we'll have a small loss here of potentially 20% of the 1% that we have invested. So we have a 0.2% risk here on that position, with like more than like 1 or 2% potential profit. And obviously, if we start going in the right direction and get confirmation, we would increase our position size here. Yeah, looking at the rest, so starting with the best one that we have right now, Icon Enterprises, IEP. Yeah, there probably it would be time to, and let's switch to, no, that chart is actually fine. It probably would be time to take some profits here. So, or we just wait it out. So like, I don't know, we're probably going to take profits here today. So I'm going to just on the other screen quickly close that position so that it's closed at market open, and we take our profit. Profit might be a little bit lower than the 42% that are shown, because it depends on what price the market will open. But if we look here, this looks like a nice 1, 2, 3, 4, and then 5 actually here. 5 might potentially go higher, so there's also the potential that this is 1, 2, 3, 4, and we still get a little bit of a high here, yeah, in which case we missed out on a little bit of profit. But it's also potentially possible that this is already the 0.5, in which case we would see the ABC taking us down to around, what do we have here, 26. So I'm going to set an alert. Set alert for around 28. So, and there we would look at it again. And yeah, only can set one alert in eToro. Unfortunately, I would, on the other hand, set an alert. Yeah. Now, I would definitely keep the alert at 28, because even if this is still going to build out at a wave 5, then after that, we would have our ABC and we'll get an entry there again as well. Yeah. So we have another position that we closed at a decent profit. And with that, we have IEP done. Disney we looked at, and now there's Goldman Sachs, Domo, and Black Knight Inc. Then let's start with Goldman Sachs, since it's the next one on the chart. And there, yeah, like looking at this, that's why when we label it, I already pointed out, it's possible that this is wave 4 and we go up here to wave 5. It's also possible that it plays out like this, where basically this will be ABC, taking us down a little further. Now, if we throw a Fibonacci retracement in there real quick to just get a secondary information or point of information, yeah, we didn't reach 38.2. And if we were to see that go down, are we currently in profit with Goldman Sachs? Yeah, I mean, it's a 2% profit, but we're actually also going to close that position here and take that profit. Missed out, could have closed it earlier with a bigger profit, yeah. But looking at this now, I just feel that, or think that it will be more likely like this. In which case I would set an alert at least at, that's what point do we have down here, 254. So I will set an alert around 260, set price alert around 260, at which point we would start to slowly enter that position again. And so we have IEP, we have Goldman Sachs. There we have the primary labeling actually, yeah, where we also have a similar outlook. And the alternative labeling was that this might turn out as an ABC corrective pattern, yeah. So like this, yeah. So again, yeah, get rid of the line and then throw the ABC pattern here. Yep. So yeah, like right now it looks more like it will check out or turn out like this, and then we will have to check where wave 5 might go. And yeah, so we'll see once we have the alert for that. And then the next thing was Black Knight Inc., which is also one of the positions where we are not 100% certain. Yeah, but we'll see how it goes. So far, Black Knight Inc., what do we have there right now? We have a 1% profit. But it actually, it looks promising with how it played out here with the corrective, combinative corrective pattern here, where right now we would be in the first wave of 1, 2, 3, 4, 5 that eventually takes us to wave 3. Yeah, like which has to be higher than the 79, 78 that we had here, which means, yeah, we have a lot of upwards potential, whereas our stop loss is reasonably close. So yeah, that's that. So again, yeah, and again with that, we basically depending on wrong page. So basically, depending on how the markets open today, we'll take the profits, although a small profit in Goldman Sachs, because again, like it looks now more likely like the alternate count that we I think covered in the last episode will be more likely. So yeah, enter too early, but then we will re-enter. So let's just hope that Goldman Sachs doesn't lose 2% in pre-market, so we still can take away a small profit nonetheless. And Icon Enterprises, yeah, there might be room for a fifth wave, but we rather take the 40% on our small position right now and re-enter later than watching it go down. And then, yeah, like, I mean, I don't think we could lose so that it goes into the negative. But if I already see that it's likely or possible that we will go down, again, in IEP, we either have a fifth wave completing here and we miss this profit, and then we go down into that area, in my opinion, where we re-enter, or we have it go down now and then we re-enter. And in both those cases, I rather secure the 40% now than have what's that? Yeah, like, yeah, then risk already losing the 40% just to potentially get that gain, and then we re-enter down here for basically wave 1, wave 2, and then for the third wave. So either way, we're going to be fine here, and we already secured some profits again. And yeah, as mentioned throughout the whole thing, or especially in the beginning, for our SQQ, SPXU, SRTY, and SDAO positions, nothing changes. It sucks that they're all in the red and partially hugely. Again, keep in mind, I understand that for you, if you just started copying and you suffered through that loss without enjoying the gains from 2022, that it's like obviously a bitterer pill to swallow. But keep in mind that those positions on average actually made huge profits throughout the entire last year, and on average are, other than the SRTY and the SDAO, actually net positive. And I'm fairly confident I've managed the portfolio well for the last 3 years. We've had some losses in between. I mean, I've lost 30%, or actually from January, basically 50% throughout the rest of the year. And yeah, we've had losing months with like -11, where was the other one? -14% in a single month in between. But we also have winning months that are bigger. And I know this year has a lot of more red numbers so far than the previous years, but I didn't change anything. My strategy is proven to work, in my opinion. Sorry, part of that you couldn't see because the camera is in the way. So yeah, what I mean is like -14% here and so on, and -50% from January, end of January till here. But still, plus 30 or plus 29, plus 34, plus 45. There will probably not be a record return this year because we first have to recover the minus 28. But again, I'm confident that we will now see our portfolio turn around in our favor. So yeah, if you're already copying and you're already suffering a loss, like, I mean, it's obviously your money, you make your own decisions. But consider that either, like instead of like closing it now at a loss, wait it out. I'm confident that I will be able, or that markets will go the way I think they should go. I might be, as said, like I got it wrong the last 2 or 3 months in terms of timing because I was already expecting the turnaround. But yeah, I'm not wrong, but I'm early. That's the whole thing I'm saying. And in my personal opinion, so I said I will probably add funds in my secondary portfolio that pretty much trades the same, and to double down on the upcoming downward gain or downward pressure or downward movement or crash or however you want to call it. And in other words, if you're currently at loss, you should or maybe consider adding funds so that once we start moving down, the loss is recovered faster. But obviously that's your decision to do. It's your money in the end. At the end of the day, if you don't want to wait it out, if you feel like I've lost my touch and so on, you obviously like you can leave at any time and stop your copy. Sorry that you ended up losing money then, but please keep in mind that my portfolio is not something that you invest in for 2 or 3 months, but it's a multi-year portfolio, and returns should be, sorry for the extra noise, should be achieved over like a 2-year or more horizon. And yeah, so anyway, that's it for today. So switching back here to properly say bye-bye. Thanks for tuning in. Thanks to those of you that are copying my portfolio and are still sticking around. Everyone else that left at a loss, I'm sorry that you suffered a loss. Keep in mind, I also suffer the same loss because I also have my own money invested. And so that's it for today. Thanks for tuning in. See you in another week. Let's see if by then the markets already start their turnaround or not. Have a great week ahead. Until next